Buy Nike stock and don't stop buying. Oh, am I looking forward to getting into this one with you guys here today. I'm going to lay this video out like this here today, okay? Obviously, Nike stock has absolutely crashed. Right now, it is back to 2018 pricing on the stock now at this point in time, right? So I'm going to lay this video out like this. At first here, we're going to go through the latest earnings that just came out yesterday, the guidance. Was it that bad that the stock should have went down 20% and went back to pricing that the stock was back in 2018? We'll speak about that first. Then we're going to get into the state of their global peers. What about other global companies? Are their businesses great right now, bad? It's going to be a very important subject to kind of understand if Nike's really doing bad right now or if they're actually doing good in this environment. Third thing we're going to get into is competition. That's something that always comes up. Oh, what about these other companies? Things like that. Very important we address that. Fourth thing we'll get into in this video, valuation. Is the stock actually a great deal or is it not such a good deal at $75? Then we're getting into potential downside left here in the stock. And the last thing we'll get into is the potential upside. How far do I see the stock running over the coming years? Okay, so very in-depth Nike video. This is a video that I can't wait to watch this back. I cannot freaking wait to watch this back. And there's a lot of videos I record, and I really don't even ever watch them back. I record them, upload them, they're done. This is one that I'm like, I'm going to probably watch this one myself like 2 or 3 times with you guys later tonight. I cannot freaking wait, okay? And this is part of a video series I've been doing over the last few months on the channel, talking about certain stocks that I see that have incredible upside over the coming years and actually very low downside over the coming years. I did one on Tesla recently. I did one on Palantir a little while back, and I also did one on Shopify a little while back. So this adds to that series overall. I appreciate everybody taking the time to enjoy this beast of a video here today, and a beast it is indeed. I appreciate everybody that's subscribed here to the channel. I appreciate everybody that smashes that thumbs up button for me. You know how much work I put in these videos. I stayed up till 2 in the morning listening to a conference call last night, looking in depth at these numbers, and that's it, man. Let's get into this, okay? Let's freaking get into this, okay? All right, so what about these latest earnings? Was it really that bad? Should the stock be down at 2018 pricing and down another 20% here today? Well, here's the facts. Let's talk about the facts around this. Revenue for Nike was down 2% on a year-over-year basis, okay? Not something you ever want to see. You never want to see revenue down, right? Cost of sales fell much more substantially as a percent than revenue fell, which is good news. You know, if you are ever in a situation where your revenue goes down, you want to see your cost of sales drop even more. And that's what we saw here with Nike, down 4% with cost of sales. So their gross profit shockingly went up 1% despite revenue being down 2%. That rarely happens with a company. Very rare to see a situation like that. Usually if a company's revenues are going down, their gross profit's almost guaranteed to go down. The fact that Nike had their gross profit go up is very impressive. Their gross margin actually increased year over year to 44.7% from 43.6%, which means likely they're out of a kind of a discounting phase. They were probably discounting a lot of products in the same quarter last year, right? Which sometimes can help your revenue, but it hurts your margins overall, right? Now, also, additionally, if we look at demand creation expense, really wasn't any change there. And we're going to talk about that line item a little later on in this video because it's very important you understand that line item there. Operating overhead expense dropped considerably, dropped 9%. Now that number should continue to go down for really the next 1 to 2 years. Nike's doing a lot of cost cutting measures right now with their business model and really streamlining their employee force, their operations, their facilities right now. And so all that's going to really help the company when it comes to overhead expense over time. So that dropped 9%. So total selling and administrative expenses actually dropped 7% for the company. So as a percent of revenue, it went down to 32.4% from 34.1%, which is more good news for Nike, certainly. And this is not a trend that's just this quarter. It's likely going to continue to play out for the next 1 to 2 years. Now, in terms of interest expense or income, they had a nice income here, 53 mil. And then as far as other income, they had 127 mil here. So income before income tax is 1.7 billion versus 1.2 billion in the same quarter last year. It's 39% growth there. Effective tax rate came in way lower than last year, 17.3 in the same quarter last year. They were at 13.1. So I don't know what magic they pulled there, but impressive tax rate. Good for their tax accountants on there, right? Net income, $1.5 billion for the company in this latest quarter compared to just over $1 billion in the same quarter last year. That's 45% up on a year-over-year basis. And then diluted EPS was up 50% year over year. Came in at 99 cents for 66 cents, okay? So Looking at that income statement, did the stock deserve to be down another 20% here today? No. I can show you guys some ugly income statements because there's plenty of companies out there that have really bad income statements and some pretty shockingly bad numbers. This is actually rather impressive. The only thing that's not impressive is the revenue. That's why I gave them a B grade, not an A grade. If Nike was growing revenues right now, let's be very clear, this would be an A grade income statement because of how much they're keeping their costs in check and bringing those costs down year over year. The only reason it's a B is because that revenue was down 2% year over year. What about their balance sheet? Check this out. If you look at cash and cash equivalents and short-term investments, it was up to about $11.5 billion roughly year over year. At the same quarter last year, 10.7, right? And then as far as debt goes, not much of a change there. If you look at long-term debt plus the current portion of long-term debt, they're at about $8.9 billion. Guess what? This same quarter last year, they were at about $8.9 billion. So shareholder equity went up 3% on a year-over-year basis. Why is that so important? This is monumental because here we are with a stock price that has crashed off a cliff in the past year. Yet, you look at stockholder equity, it's actually gone up in the past year, 3%. And so it's a very rare situation if you can get stockholder equity going up while a stock price is crashing. This is actually something that's going on with Nike, which actually is a pretty good sign in regards to you want to see your bottom line going up and you want to see your shareholder equity going up. That's like investing 101 as a long-term investor, and that's exactly what we see actually here with Nike right now, right? Now, in terms of their guidance, so what they think might happen for their business model here in the shorter term, right? So, faced with challenge of navigating macro headwinds that have had a pronounced impact on fiscal 2025 and continued softness in China, Nike now expects fiscal year 2025 sales for the sportswear giant to be down mid-single digit. So think kind of in the 4% to probably 7% range, with sales in the first half being down high single digits. So think about kind of in the 8 to 10, or we shouldn't say 10%, 8 or 9% range. That's kind of what I would think about that, right? Maybe even 7%. The company initially guided for a low single-digit decline for sales in 2025. Gross margin in fiscal year 2025 is expected to expand 10 to 30 basis points. So despite them expecting revenues to be down mid-single digits, right? They're still expecting gross margins to actually improve on a year-over-year basis, which is, once again, very rare, and that's actually a really good sign. For Q1, the company is expecting revenue to drop 10%, with gross margin in line with its full-year guidance. So once again, that's a really positive thing in terms of gross margin, that they're expecting gross margin to roughly be in line with kind of what they're expecting for the year, despite revenue being down 10%. Woo! Wow, that's pretty shocking there. So the guide, not good, not exciting at all, right? That's pretty clear in regards to that. So the facts and the takeaway from yesterday's earnings is revenue is disappointing. It's not off a cliff. The numbers were down 2%, and then for what they're expecting this year, mid-single digits down, they're talking about, right? That is not a, end of the world, like, oh my gosh, Nike's ruined type number, right? If that was 15%, 20%, which is what I'm seeing some of these companies guiding out for their revenues being down, I'd be really, really concerned. But mid-single digit in this environment like we're about to go through, not concerning. Margins are going up for the company. Profitability is going up substantially for the company. Shareholder equity is up 3% for the company while the stock's down huge. They have a strong balance sheet overall. We just witnessed those numbers, right? And tough times, and Nike's still making bank. I think that might be the most important thing of this whole story, right? This is a disaster dumpster fire for Nike. And their net income was up 45%. Their revenue's down 2%, right? Think about that for a moment. Let that sink in, because think about what it means for other companies when they're actually going through tough times. When other companies are going through tough times, they're losing money on their bottom line. They're in a situation where there's talk about them going bankrupt, right? And here you have Nike, shareholder equity up, profitability through the roof, and this is horrible times for them. And the stock's at multi-year lows. Isn't that incredible? So it kind of reminds me of like this, right? It kind of reminds me, I asked my brother-in-law, I don't really follow soccer too much, which, we call soccer in the United States. You guys might call it football in other parts of the world, right? But I said, hey, is Ronaldo, is he still like one of the top players? And he's like, well, he's pretty good, but he's not like a top dog like he was, years ago, right? And it kind of reminds me of Nike right now, right? And you could look at LeBron James. LeBron James still one of the best in the world, but is he the LeBron of old? No. Tom Brady, with the Bucks, he was great, but was he quite Tom Brady with the Patriots? Maybe not quite that, right? And that's kind of Nike right now, where it's like, they're still one of the best, but they're just not quite putting up the numbers that they're expected to put up, right? But let's not fool ourselves. Athletes have a shelf life on them, right? And as you get older, it gets tougher and tougher to be at the top. Companies can get their mojo back, and next thing you know, it's like they're in their 20s again. And if you look at Nike over time, guess what? It's happened many times. This company's had plenty of tough times in their history. 1986, stock went down about 17%. 1993, the stock fell 44%. You could have thought it was the end for Nike at that time. What a tough year that was. 1997, the stock fell 35%. 2002, the stock fell over 20%. 2005, the stock fell 4%. 2008, the stock fell over 20%. 2016, the stock fell over 18%. 2022, about a 30% drop. So 2023 was a 7% drop, and 2024 started out horrible. We'll see where the year finishes up, but it started out horrible, right? So understand, this is not the first rodeo for Nike. This is not the first time their stock's gone down a bunch. This is not the first time they've been counted out, right? And at the end of the day, they grow stronger and stronger and stronger over time. Now, what is the state of global peers? Because Nike's a global company. They do business in Europe, they do business in China, they do business in Japan, all over Asia, and obviously massive market in the United States. What about the global peers of them, right? Well, these other global companies are reporting horrible numbers. This is Apple's latest earnings. I don't know if you guys got to see how bad it really is at Apple right now. iPhone revenue went from $51 billion in the previous year quarter to this latest quarter, they did $45.9 billion. So we're talking, what is that, $5.5 billion roughly iPhone revenue down on a year-over-year basis. It's not a small amount, $5.5 billion. iPad business was down over $1 billion on a year-over-year basis. So that means they're doing over $300 million less in iPad revenue every single month than they were doing at this same point last year. As far as wearables, home, and accessories, that was down about $800 million on a year-over-year basis there. And for total net sales for the company, the service is really the only thing that saved Apple, right? Total net sales for the company, it was down over $4 billion on a year-over-year basis, right? So there you got to look at it and it's like, is it Apple specific, or is there something going on globally economic-wise that's really troubling here? What about Starbucks? Starbucks has stores all over the world, right? Starbucks' latest numbers, guess what? Revenues went down for the company. You never expect Starbucks revenues to go down. Starbucks revenues were down about 2% year over year, which is shocking. Like, what? How could Starbucks revenues go down, right? Operating income was down 17% for the company. As far as net earnings to Starbucks, down 15% for the company. What about a company like Estee Lauder, cosmetics giant, does business all over the globe, right? If we look at the latest 9 months for this company, net sales went down 5%, gross profit down 6%, right? Now, in the latest quarter, they actually picked up, but I think Wall Street believes that that's just like kind of a one-off, and they're actually going to continue the trend of their revenues going down here, and that's why that stock continues to fall. If you pull up a 5-year chart on this, it's down 34%. Estee Lauder stock right now, the global cosmetics giant, is back to pricing it was back in 2017, folks. What about UPS and FedEx? Those companies have been reporting volumes being down in their most recent quarters, right? UPS revenues were down over 5% on a year-over-year basis. No bueno. Tesla, company you expect to grow massively every year. What if I told you Tesla isn't growing in their most recent quarters? Their business is actually shrinking, which is shocking, right? Total revenue is down 9% for the company in their latest quarter. Total gross profit down 18% year over year in their latest quarter, right? Crazy to think that. So the bottom line is 3 years of inflation, guess what? It took its toll. It finally really hit the consumer. We have a consumer recession going on right now. They're not talking about it on mainstream media, but factually, when I look at all the strongest, biggest global companies in the world, it's clear as day that we are going through a consumer recession right now. Right now. There's no debating it. There's no talking around it. It's going on right now, and there's overwhelming evidence. I could have took you through Home Depot's numbers. I could have took you through Lowe's numbers. I could take you through a million companies' numbers, and the guidances they're giving, it's clear as day. Inflation has taken its toll, and the consumer's in a bad place, and we have a consumer recession going on right now. Not like maybe it's coming a year from now, 2 years. No, it's going on right now, folks, okay? Now, to add insult to injury in this situation, you have Fed has interest rates by far and away the highest they've been in 10 plus years, right? Over a decade. And we live in a world that's very addicted to debt, credit cards, people take out loans to buy cars, to buy homes, all these sorts of things. Well, if all of a sudden the Fed raises interest rates substantially, right? While the consumer's obviously been hit by inflation for 3 years now at this point in time, right? 3 years plus. It's devastating because then if you try to take out any debt to buy anything, right, you're paying ridiculous amounts of interest on that debt. So we're just in a horrible, horrible situation in regards to the consumer right now. This will not last forever. The Fed will not have interest rates at the highest they've been in 15 years forever. They will drop interest rates. And in terms of real wages, they won't be in a bad spot forever. But let's be very clear. It's right now, and it's what's going on, and it's what we're having to deal with, right? Now, meanwhile, the top 10% of the wealthy are doing great, right? I mean, if you've got a lot of money in the bank and you're getting 5% on your treasuries, 5% on savings, right? And I mean, so what? The price of eggs has gone up and the price of milk has gone up. I mean, it's such a little expense if you're a top 10% income earner or a top 10% of the wealthy, right? It doesn't matter. If gas prices are more, who cares? It's irrelevant to you, right? But the issue is the top 10% of people can only buy so much. So even if the top 10% are having a grand old time right now and are feeling great, stock market at all-time highs, right? You can get 5% plus on treasuries and 5% on a high-yield savings account. It's beautiful, right? At the end of the day, the top 10% can only buy so many iPhones, can only buy so many pairs of Jordans, can only buy so many lattes at Starbucks, right? Let's say, hypothetically, the public counts up $90,000 next week, okay? So the question is, will I go buy, because the public counts up $90,000 next week, am I going to go buy extra lattes from Starbucks and extra iPhones and Jordans? Well, that's not how it works, right? I have too many pairs of shoes already. Do you think because my portfolio's up an extra 100,000 next week, then I'm going to be like, oh, let's get down to the Nike store. I got to go buy some new Jordans. No, that's not the way it works, right? If somebody else who maybe doesn't have so many shoes, or their shoes are all tore up, and they get a better job, they might go down to the Nike store and they might go down to Foot Locker and go buy a new pair of shoes, right? But when you already got so much money and you already have so much, you make more money. It's not like you're going to go buy extra stuff, right? If I make $90,000 on stocks next week, am I going to go buy another new iPhone? No, I got 5 iPhones, 5. I have my main everyday iPhone. I have a backup iPhone, and then I have 3 other iPhones that are used to record videos on. So it's like, doesn't matter. I can make $900,000 in the stock market next week. It is not making me go down the Apple store and be like, let me go get another extra iPhone. Like, it doesn't work like that, right? I was in New York City last week, right? I went the whole week, over a week actually, in New York City. And, obviously I had to go out for everything as far as drinks and eating and all that sort of stuff, right? And guess what? Every single day I was there, I bought 1 iced latte or cold brew each day. It wasn't like, oh, I made extra money today. I'm going to go buy a second latte. It's not how it works. But if somebody's facing tough times, they might say, you know what, I'm not going to go buy that Starbucks latte. You know what, I can't buy that extra I can't buy a new iPhone right now. I'm going to keep my iPhone 11 I have, or iPhone 10 or whatever, right? Or a situation where it's like Nike specific, right? Man, I would love to go buy a new pair of Jordans, but I can't afford a new pair of Jordans right now. That's the issue, and that's what it's very important everybody understands about what these companies are going through, because it's very easy to look at some of these companies' numbers and assume the management teams are doing a bad job. When in reality, if you're faced with a consumer that's been sliced and diced by inflation, that's way bigger than what you're having to deal with, right? That's way bigger, right? So that's what's important here, right? The 90% is what actually dictates if you have a strong overall economy or not. The top 10% of people can only buy so much. They can only buy so much. And so that's what's very, very important to remember in regards to these companies like a Nike and these other ones that, are unfortunately going through a tough time right now, that they can't control. a lot of what's going on out there, right? And that leads us to competition. Always a very talked about thing in regards to any stock that's going through a tough time, and it's talked about right now in regards to Nike, right? So when you go down the Nike rabbit hole, you realize that Nike has no competition. And that's my own quote, okay? I'm quoting myself, Jeremy Lefebvre. The reason you realize, and you might say, well, how does that happen? How does Nike have no competition? I see all these other shoe brands, there's so many different brands and all these different things. And I mean, a lot of people sell shirts and, athletic pants and all this stuff. The reason Nike has no competition, you got to understand, is no one can or invest in their brand like Nike can. No one. This line item, remember I told you I would come back to this later on? Very important line item. Nike demand creation expense. They spend $4 billion plus a year on athletes, sponsoring leagues, and this is why every single time you turn on a major sporting event with the best athletes in the world, you're going to see Nike branding all over the place. On their uniforms, on their shoes, everything like that, right? You watch the NBA Finals, guess what? Both teams are Nike and Jordan symbols there, right? You turn on the Super Bowl, there it is. There's Nike symbols. You turn on the Olympics, wow, Nike, right? You watch Caitlin Clark, the most hyped, talked about women's basketball player in history by a mile. And guess what? She's a Nike athlete. There's her Nike shoes and, playing with the Nike basketball. And there's Nike symbols all over the place, right? Steve Jobs, one of the best businessmen in the history of the world. Do you know what company he respected the most in the world when it came to marketing? It was Nike. There's old speeches of Steve Jobs talking about the best example in the history of the world. Nike. He said, remember, Nike sells a commodity. A commodity. And yet, you wouldn't ever know it. You wouldn't ever know it. Shoes are a dime a dozen. T-shirts are a dime a dozen. Athletic shorts are a dime a dozen. Socks are a dime a dozen. And yet, when it comes to Nike, it's different, right? And so Steve Jobs always, just like I said, a business genius, always had such a tremendous amount of respect for Nike because they just understand it better than anybody else. And that's why when you go down the rabbit hole, you realize Nike actually has no competition. And even when other brands will outbid an athlete and a big name athlete will go somewhere else, they screw it up actually, right? They actually don't leverage it right at all. I remember Usain Bolt, the greatest track superstar in the history of the world, right? Global superstar this man was. And Puma signed him. Nike wasn't able to sign him. And I just don't think they leveraged his brand and how big of a personality he was and how unbelievable that man was. I don't think they leveraged him at all. And I think it actually probably hurt Bolt a little bit as well. I think if he would have signed with Nike, he would have made way more money. Maybe not on the initial contract, but his name, the leveraging, he could have, the exposure, how much Nike would have advertised him overall. I mean, my gosh, it was a huge mistake by him to sign with Puma, and Puma never leveraged him the way they should have, right? Anthony Edwards, great personality in the NBA, definitely has superstar potential all over him. He's an Adidas athlete, right? And I look at what Adidas does with him, and I'm just like, they're screwing this up. They're not leveraging him nearly as much as they should, in my personal opinion. And it's a really bad look also when every time Anthony Edwards goes out on that basketball court, he's got Nike symbols all over him. That's a really bad look, right? That's why Nike's they're in better than everybody else because, Anthony Edwards might be an Adidas athlete, but you wouldn't know it. Look at all the stuff he's wearing. It's all Nike, right? Adidas, they had their relationship with, Mr. Ye there, and we know how that ended. And look at what happened last year when that relationship went south, right? I mean, sales were down 16% in North America. So these brands, they find a way to screw it up. They always do, right? Allbirds was all the hype 5 years ago, right? This brand was so hot. I mean, oh my gosh, they didn't even have any athletes from what I remember, but Allbirds shoes were the hottest. This company is probably going bankrupt. High probability. It's down to 50 cents now at this point in time. If they don't go bankrupt, it's a miracle. That's how bad it's gotten at Allbirds, right? You look at Under Armour, they signed one of the greatest basketball players in history, right? They signed this man, the greatest shooter ever, Steph Curry, And yet, look at him every time he goes out to play basketball. There's Jordan symbols all over him. There's Nike symbols all over him. And here we are, Under Armour stock's down 73% in the past 5 years. It's down to $6. It's almost a penny stock territory. The SEC calls any stock that's $5 or lower a penny stock. Under Armour's almost there to penny stock territory. They all screw it up. Lululemon. Lululemon's supposed to be the next Nike, right? We could be witnessing right now another one biting the dust. Lululemon stock is down 41% so far this year. This stock has gone from the hottest thing in the market to the most cold thing in the market. And this is a company that they need to make that next leap to try to become a Nike. And I don't know if they're going to be able to do it. And if they start losing some of their brand presence, if this thing starts turning south, Lululemon could be in a lot of trouble, because what we've witnessed from company after company that's competed with Nike over time, as soon as you start to lose that coolness or that, whatever you had working for you, that little mojo in the short term, as soon as you lose that, it can go south very, very, very quickly. Ask Under Armour, ask Allbirds, ask all these companies that come and go against Nike, right? Remember Reebok? Probably a lot of you guys right now watching this, you probably don't remember Reebok. I remember Reebok. I remember Reebok in the 1990s as a kid. And the reason I remember Reebok is in my household, my parents wore some Reeboks. I think I had some Reeboks for a while, and then that slowly got phased out for Nike products over time. But I do remember Reebok, right? Whatever happened to Reebok? I don't know. Like there was a time period in the 1990s where it was like, wow, Reebok and Nike, they're really going at it. And now here we are in 2024, and just like I said, most youngins don't even know, never even heard about Reebok. Do you remember And One? Do you remember And One? And One was the hottest shoe brand in the world around 2003, 2004, 2005, kind of around the time when I was in middle school, kind of around the time when I was going into high school. Oh my gosh. And One was everywhere. It was the hottest. It was the coolest. They had the mixtape tour. I would watch that on ESPN and just be enamored with the tricks these guys were doing on this And One tour, wearing their And One shoes. I'd go to the backyard, start doing all this dribbling after watching the show, be all jacked up. Oh man, it was so phenomenal. I wanted a pair of And Ones. Don't think I ever got it. And then whatever happened to And One? They had it. They had the cool. They had the culture. They had the culture. That's what's crazy. And One had the culture in oh my gosh, they had it. What happened? You got to ask yourself that, right? There's a great documentary they put out on Netflix a couple years ago, Untold, The Rise and Fall of And One. If you get a chance at some point, watch that. It's impactful. So what we see is time and time again, these brands come, they're on the come up, they're hot for a year, a few years, and then next thing you know, they fall off and Nike remains, right? It reminds me of similar, honestly, to my YouTube career. I've been on YouTube since 2016. I've watched so many people come and go. I've watched other people become the hot channels at a particular time, and here I am. I just remain one of the most viewed year in and year out, one of the most successful year in and year out, and it just remains like that, right? And I watch everybody else come and go, and I just stay here, kind of like Nike does, right? Nike, they come, they go, they fall off, and then they stay relevant year after year, year after year, right? So I leave you with this in terms of the competition. When you go down the Nike rabbit hole, you realize Nike has no competition. Next up here, let's talk about valuation for the stock. And then we'll get into potential downside left here and where's the potential upside here, okay? Valuation. So if we go to 1000xstocks.com, we're going to find that forward P-wise, let's call it 22-ish for Nike right now. 2-year out forward P, which I think is a very important metric, at about 16.5. Now, those are probably too high in numbers. It's probably lower than that in my personal opinion. You got to understand, Nike's doing massive cost-cutting measures right now that are going through over this next year or two. It's actually a multi-year effort. And so you're going to likely see the expense base of the company continue to fall and fall and fall. And obviously, revenue is not in the best place for this year, but in my opinion, you're going to see Nike revenues improve quite dramatically in 2025, 2026. So as the cost of the business is continuing to drop, right? And then we get revenues going back up in 2025 and 2026. I think the forward P and the 2-year out forward P are going to end up actually being much lower than what it seems here, right? Which is very attractive because it's very rare Nike's traded at these sorts of like 2-year out forward Ps. It's pretty darn attractive. Now, if I want to compare, and one of the things I love about 1000X is I can compare several stocks against each other, right? So for Nike, I can't compare this with Under Armour or any of these other companies, even Lulu. I just don't think they're real comps. I got to compare Nike versus other gigantic corporations that do business all over the globe that remain relevant decade after decade after decade, right? And aren't just capitalizing on being the hot thing at the moment. So if I'm going to compare them to companies, I need to compare them to Starbucks. I need to compare them to companies like Apple. Now, in terms of Apple and Nike, it's kind of like, well, okay, you need a new pair of shoes, you go out and get a Nike, right? Okay, your iPhone breaks, you go get another iPhone, right? Oh, your iPad breaks, you go get another iPad, right? So that's kind of why I think about Nike and Apple in the same sentence. But I think the best comp is actually Starbucks to Nike. Now, Starbucks has two main issues that I think are huge issues that Nike doesn't have to deal with. Starbucks actually has a super legit competitor in North America that's going to be a problem for them over this next decade. And that their company's name is Dutch Bros, ticker symbol Bros on that one. That's a huge growth company. And by the way, the stock is trades at very rich valuations. But in terms of the company, they're going to be a problem for Starbucks in North America. They like to set up locations right across the street from Starbucks, and it's going to make Starbucks' life difficult, okay? So that's something Starbucks has to deal with that Nike doesn't have to deal with. And the other thing is Starbucks has to deal with labor cost. Labor cost, because their business model is so labor intensive, right? Nike doesn't have to deal with that. Nike sells wholesale, so they sell to like the Foot Lockers and the DKS Sporting Goods and a bunch of other retailers, and then they have their online business as well. They do have some stores, but they're like just gigantic flagship stores. So the labor cost hits Starbucks a lot bigger than a Nike. So overall, I look at something like that and I say, okay, I like Nike's positioning a lot better, right? And if we look at Nike, Nike should, in theory, have better EPS growth over the next, I would say, this year, next year as well. Then we look at something like gross margins. Nike's gross margins are substantially above Starbucks. Net margins are roughly in line with each other at 9-ish%. And then trailing 12-month and forward price to sales ratios are roughly in line with these two companies. But the difference, once again, is Nike doesn't have a Dutch Bros to have to worry about, which, once again, is a serious competitive threat. And they also don't have that labor cost component, which is a huge problem. You have state after state going up on minimum wage, which puts huge pricing pressure on Starbucks, right? It's a problem. It's a problem when you got to deal with that overall. So I like Nike's valuation here as well if I compare them versus their peers. And if I just look at it overall, I think it's getting a very good value on the stock now at this point in time. By the way, 1000xstocks.com, we're going to do a one-day sale July 4th for it. I pretty much always do some sort of sale on July 4th, and then I do a sale on Black Friday for some sort of product I have, like a course or Patreon tier or something. And so for July 4th, I thought, let's do 1000X stocks since this is the year we're launching this product, right? And so if you want access to that, pin comment down there, enter in your name, your email. We'll send over that deal as soon as it drops on July 4th. It's a one-day sale only. If you want the deal via text message, we can send it over as that way as well. And that's for full access to it. And then you also get your Steel membership card. I still got this one in the plastic. Your founding membership card in the mail as well. It's a beautiful, beautiful card, okay? So yeah, that will be a pinned comment down there, enter your info if you're interested in that, and we'll send over that deal when it drops July 4th. So last up here, let's get into the potential downside left in Nike stock, and then we'll talk about where's the potential upside I see for the stock overall, okay? So for Nike, let's be very clear what's just transpired with this stock. This is a dropout bottom situation. A dropout bottom situation in regards to stock is when you have a stock that has already been faltering, it's already crashed, and then it has some sort of last kind of hurrah, like next big crash. Like, how did that stock even crash again like that, right? That's Nike stock today, down another 20% after the stock's already been in a horrible place. And this is kind of the opposite of a blow-off top. You know, sometimes I talk on the channel about a blow-off top for a stock. There's a situation where a stock's already been going up, hitting new high after new high, and then it just has some explosive blow-off top where the stock goes up another 15, 20, 25%. It's like, how? This stock was already at all-time highs, record highs, something like that, right? We're in the opposite situation in regards to Nike. So how much lower do I think the stock could really go? The absolute worst case scenario I see for Nike in the short term here is the stock goes to like $50 to $55. And that's the absolute worst case scenario. And that would be, analysts would have to keep coming out, downgrading the stock. I don't even know how it gets there. I think also simultaneously the market would have to get hammered as well, because that would put the stock all the way back to 2017 pricing, if you're talking about going back down to $50 to $55. So that's absolute worst case scenario I could see. Could I see the stock going in the 40s? I can. Not even in a market crash scenario can I see the stock going in the 40s. Like, this is pretty shocking already here. Now, in terms of upside, what do I see for potential upside here? So in 3 years, this is my base case for the stock. Base case, 3 years from now, I see the company doing $10 billion of net income. Now, if you want to put a 25 PE on that, which is very fair for a company like Nike, that's, one of the most respected companies decade after decade after decade, right? You're at about a $250 billion market cap. Now, currently, the company has about a $113 billion market cap on it, somewhere around there. So in this sort of scenario, that would mean the stock price goes to, let's call it 170-ish, which is pretty substantial upside from my base case scenario here, right? And remember, the company just had a quarter where remember, this isn't even supposed to be a good time for Nike. This is their trash time, horrible time. Companies still do $1.5 billion in net income just in the latest quarter, right? So if you annualize that, you're at $6 billion, and that's horrible times for Nike. So where are we at 3 years from now? I think $10 billion is a pretty high probability, right? So then we go into my bull case. My bull case is a company gets to about $14 billion in net income 3 years from now, which if we put a 25 PE ratio on this, that's about a $350 billion market cap, which is about a $225-ish type stock price, right? So substantial upside for Nike overall. And when I think about how little downside there is here, and I think about the potential upside over this next just 3 years, I'm not even talking 5 years from now, 7 years from now, that's pretty substantial, right? And so like Nike symbol, just do it. That's me with Nike stock right now. This is one of those, it's very easy for me to buy the stock week in and week out. I hope it goes lower. I hope it breaks 70. I hope it goes to the 60s. I hope it goes to the 50s, because at the end of the day, every share I buy this stock is going to end up being easy money in the end. I don't have to worry about this one. Great balance sheet, great income statement. In horrible times, they still make so much money. Think about that for a moment. In horrible times, they still make so much money. Where is this company going to be when it's good times again? Where's this company's net income going to be again when their revenue is going up 5, 10, 15% instead of down, right? That's what you got to think about in regards to a company like this. And so I love it. It's easy owned. It's an easy stock for me to buy, and it'll be easy money over this next 3 to 5 years. And the short term will be the short term. And I hope it goes as low as it can go in the short term, because every share I buy is just a lot more upside. I mean, if I think the stock's going to $170 to $225, if I can buy it at $50, it's even more money for me to make. 60, 70, it's even more money for me to make, okay? Appreciate you guys joining me as always. Thanks so much for being here. Once again, that one-day sale of July 4th is coming up very soon here. That's, 6 days away. Pin comment down there, enter in your info. We'll send that over as soon as it drops, 4000X, and you will get your Steel membership card as well when you join 1000X, okay? Much love and have a great day.